Good morning and welcome to today's Morning Report Chart Analysis videos on Tuesday the 14th of August with me, Richard Perry, Market Analyst at Hantec Markets. We've had a degree of settling in the markets today. That's come as the Turkish lira has started to find some support. It hit a low, well, on dollar Turkish anyway, a high of 721 yesterday. That's unwound now as the Turkish lira has found a degree of strength, 650 at the moment, and that is allowing these markets to find a touch of support this morning. You can see here where market risk appetite has just improved a grade, and you've got euro bouncing, cable, and more importantly, I think the yen weakness. Yen has unwound some of the strength that it saw yesterday. Equity markets also feeling more positive today as S&P 500 futures have bounced. Asian markets were stronger overnight, and that is sort of translated through to DAX and CAC bouncing, and well, certainly FTSE as well, but DAX and CAC outperforming today. So that's come as the dollar's just sort of given back a little bit of the gains. I'll zoom in a touch there. You can see that the dollar has just slipped a touch today, nothing too significant. Treasury yields are higher, which is sort of reflective of the retracement of risk appetite. But it's interesting because China and the yuan will be one to watch, I think. The yuan is slightly stronger, nothing too significant, but interestingly what we saw overnight was all this Chinese data, missed estimates across the board. Fixed asset investment, industrial production and retail sales all lower than expected. So that's not great for China going forward, and how the yuan, and that sort of reflects also the fact that the trade tariffs may be beginning to bite a little in terms of sentiment anyway in China. But yeah, we've had a slight improvement in risk generally across the board today. In terms of data today, we're looking at the UK. The UK employment outlook, and that comes at 9:30, and the expectation is for unemployment to stick at 4.2% again. Where's unemployment? 4.2%. Average weekly earnings 2.7%. Now that is that's going to be, well, inflation data comes through the UK data throughout this week pretty much, and that will be watched as the data gets released, because you've got inflation tomorrow and then retail sales on Thursday, so a lot of UK data will be watched, and how the average weekly earnings start to come through. As I said, they've been just slipping back a touch in the last month or so, and inflation is expected to pick up tomorrow. So this is interesting. You could see these two lines again converging, which is not good for the UK consumer. Anyway, my chart of the day is the Aussie dollar. Now, generally speaking, we've seen a lot of these charts doing this. An Australian dollar is very similar to this, where you've seen this consolidation back to a downtrend and then selling off through the low of 731. That completed a range breakdown, which gave around about 175 pips of downside target. So you're then looking at sort of the 7140 area, for example. Now 7140 gives you, if I zoom out, pretty much bang on these two key lows from 2016 and 2017. December 2016. So two key lows at 7140, and that's what the downside break of this little range gives you in terms of an implied target. Now, we've got a slight degree of oversold momentum that's just beginning to unwind, but the market is ultimately just consolidating. So you'd be looking at your selling opportunity, and that old support at 731 becomes now a new basis of overhead supply, because you've got all these lows here, the lows here. So you've got a nice sort of band of resistance, I would say, between 73.50 and 73.10. Any unwind into that, I think, that finds another bear signal would be a selling opportunity. That would be the ideal level to get. Now you've seen these 3 bear candles in a row. Slight move to the downside today, although there is the air of a bit of a dollar correction. Not really seeing it through the Aussie dollar quite yet, but it'll be interesting to see if you do see a little bit of an unwinding move. 73.10 would be ideal here on the Aussie dollar for selling opportunity, because it certainly looks as though you're still playing out this run of lower highs, lower lows, all momentum indicators negatively configured, all the moving averages falling in bearish sequence. It all points to using any sort of rebound as a chance to sell. And as I said, this range breakdown 73.10 to 74.85 gives you an implied target of 71.40, which is the key support from 2016. So I wish you good luck in your trading today. Oh, let me just give you a little bit of an upside move on the hourly chart. Unwinding moves, yeah, basically around 50 to 60 is ideal, I think, on the hourly RSI. MACD line is already starting to struggle on the hourly. So I wish you good luck in your trading today, and I'll speak to you later.